Sorry.
Yes, sir.
So according to the principle, you discover that order blocks, these are candles where market makers or the big banks have placed their trades. So it is where market makers or banks have placed their trades. That is the principle of order blocks. Now, if you happen to look at all these things, you'll discover that the term order block is going to classify two types of candles on the market. We are going to have type 1 and type 2. Type 1 is for non-commercial traders. Type 2 is for type 1 is for non-commercial traders and also commercial traders, non-commercial and commercial traders. Type 2 is for non-reportables. So non-reportables, this is where it is being categorized as the people who are retail traders or people with small amounts of money to trade, below 20 million United States dollars. Now, if you look at this, you will discover that because of type 1 and type 2, we have two types of candles. Candles for commercial or market makers in general term, and this is type 1. Type 2 is for retail traders, also known as small traders. Now, for you and I to understand about these types of candles, it is very much important that we put into consideration what we are seeing on the market, either on a higher time frame or smaller time frame. Now, without further ado, you'll discover that each of these candles, they are candles that are symbolizing market makers and candles that are symbolizing retail traders. Let's try to define what order blocks are. And these order blocks are candles that are going to help you and me to know what the market makers are thinking about the market. So order blocks are candles where market makers have placed their trades. So it simply means that if this one is a bearish order block, it means the big guys entered their sell orders there. As a result, in the future, we'll expect the market to have difficulty, and yet we'll expect the market to do what? To drop, because it is telling us that there is a big influence, sell influence right there on the market because of this bearish order block. It is also telling you that when you look at this order block, you can even tell that indeed this is where the big guys entered their trades. As a result, you can tell from these nice, powerful candles that kept dropping to the downside, especially the first 1, 2. These two powerful candles, for 8 hours, the market kept pushing so much powerful. So this also is telling you that this movement was influenced by their entry levels at that bearish order block. So in the future, if we try to take this, we try to take this and put it like this, you discover that the market dropped. Even though you can tell that the market made a fake breakout, but that fake breakout respected the integrity of this structure. It never broke out above that structure. It remained inside, but it made a fake breakout above that order block. Just like I said yesterday, VIX 75 has a tendency of making fake breakouts. All right, so it is very much important that you use patience, you exercise patience every time you are trading, because this is going to help you not to make the mistake. So there are two types of order blocks on the market. We have the bearish order block and we have the bullish order block. Now let's talk about the bullish order block. What is a bullish order block? According to the definition, it states that a bullish order block is a last bearish candle. So a bullish order block must be a last bearish candle before the bullish movement that breaks the market structure, like this one here. So when you look at this one, you will discover that there is going to be the last bullish candle. If I can mark it like this, I'll mark it like this, the last bearish candle, which is the bullish order block. So there is this last bearish candle followed by a bullish movement that broke above this structure, also this swing high, like this. So as a result, when the market broke above this swing high, it was also known as the break of structure. So let's call this one break of structure, like that. And then I'm going to give it the color white. And then I'll point this arrow at this level. So that one was a break of market structure because the market now broke above this supply or swing high. Secondly, it is also important that you remember the principle that states that break of market structure occurs when the market breaks above the swing high or swing low. So this one was a break of structure. And now, what breaks the structure of the market? The only thing that can break the structure of the market is an order block. There has never been anything or no ordinary candle can break above or below the structure or can break above the supply or demand. Only big investors have that privilege because they use a huge amount of capital to influence the movement on the market. Secondly, it is very, very much important for you to understand the three qualifications of an order block to be an order block. Number one, an order block must break the structure. So let's just say this one, the market is making a ranging like this. And then it forms the last bullish green candle like this, followed by a drop like this. This means this has qualified to be an order block. Why? It has broken below the structure. But there are also situations where this is the ranging market structure, and yet we see the market forming another last green candle, and then you see the market dropping like this, but it has not broken below the structure. This is not an order block. So a real order block must break the market structure thoroughly like it did here. Secondly, the other qualification is how are the candles looking? The momentum of the candle. When you look at this candle, this one, and this one, they are showing you the power that these guys used to exert an upward movement in order for them to break the structure. And the market moved upward for 1, 2, 3, 4. For 12 hours, because we are on a 4-hour time frame, and if you do 4 times 4 is equals to 16. Yeah, it's 16, not 12 hours. 16 hours the market kept moving and reached at this level, then later formed this bearish movement. Okay, because that's what it was. The market reached here bullish and then started pushing towards to the downside. So the market exerted a powerful movement there. So number one, it was the market must break the structure. Number two, momentum. The candles must look healthy, showing a buying power for the bullish order block. Number three, the time or the period, symbolizing time. All right. So sometimes you discover that the market breaks above the structure only to reach there and then forms another candle and then it pushes up. Okay. So this is how you can tell. For example, another example that I can tell you, this one, you can think this is a bullish order block, but it is not a bullish order block, this one. Because when it formed this last bullish candle, the market came and reached here. It did not break this one, this swing high. No, it didn't. But this one is a bullish order block because the market reached there by breaking this swing high. It reached there. That is a bullish order block. So that is what qualifies an order block to be an order block. So when you look at this order block, this one here is a bullish order block that pushed the market up. Also, if we go on a 1 hour time frame, you'll see again that there is a bullish order block here. Let's see it. If you look here on a 1 hour time frame, it is going to be impossible for you to see it. But if we now try to mark the area of the structure, we mark it like this, you will discover that this level here is a bullish order block. This one. We mark it like that. Like that. Why? Though it did not move that much, it moved for 1, 2, 3, 4 hours, reached there, consolidated, created a bullish order block. As a result, the market again started moving from this level. It pushed again. The market created another bullish order block, which is this one. This one. And then we'll do this. Like this. So this one is a bullish order block as well, because it broke the structure on a 1 hour time frame, and it came and created a new level of supply right there, a swing high right there. So why did it create this supply? It is because there is another bearish order block here. And the bearish order block is the last bullish candle before the bearish movement that break the structure. When you look at this candle, the market came and created a new level of demand here, all right, a swing low. So if I do this, you'll discover that this market here broke all the way from this level. It came dropping, it reached here. It also managed to break below this level of demand here by creating a new demand below here. So as a result of this movement that influenced the movement down, made the market not to go any further here because of this bearish order block. And the bearish order block is the last bullish candle before the bearish movement that break the market structure. So that is what order blocks means. So if you want to now begin analyzing, you must begin on a higher time frame, which is 24-hour time frame, or rather daily. So if we go on a daily time frame, we will begin our analysis. So this is how a daily time frame looks like. When you look at this daily time frame, you understand with me that the market broke below this structure, leaving this bearish order block, this one, like this. And then this is what made the market not to go any further because of this bearish order block. The market reached here, started dropping, and it dropped for 2 days. 1, 2, then it's the second day it reached here and then started pushing back up. Why did the market start pushing back up? We are not seeing any order block. If you look here, you will discover that this swing high here, this candle here, is the target these guys used. It was acting as a level of supply. It became a level of a demand here. Is it making sense with this?
It's very, sir.
So you must always remember to mark this. I have marked here because this here is a level of, this here is a level of a swing high. All right. This is a swing high here. That is a swing high, and the market came and created a swing low right there. And what was the reason? Why did these guys do this? they looked at this swing high, it became a swing low or demand. And that is where the market started pushing from. 1, 2. We are expecting the market to continue.
Breakout.
Because the market is coming also from this level where they even made the bullish order block, which is this one. That is a bullish order block. This one, the one that sponsored the move up on a daily time frame. So if we mark like this, we have two places to place our trades. Here we would have seen, oh my God, the market has broken below. Had it broken below and or form a new candle or just drop like this, would have expected the market to reach this bullish order block and would have been ready to buy from this level. But the moment the market started consolidating here, if we try, I try to take you on a 4-hour time frame, you will see what we have labeled and how they are going to look like on a smaller time frame. And here it is. Look at this. So look at this. The previous swing high became a swing low, or rather a demand at that particular time. Okay. And secondly, these two white lines are the order block, bullish order block we marked on a daily time frame. But in reality, there is a bullish order block for this chart, which is that last green, red candle. I'll give it a yellow color. This one here is a bullish order block on a 4-hour time frame. So I am going to mark it to say 4HBOB, meaning bullish order block. BOB means bullish order block. 4H, it means 4-hour time frame. And then for this one, I am going to mark it on this white line, and I will say daily 1D BOB, all right? And you even know that this one, the one I have put here on this white line, it is for the 1 day or daily order block, bullish order block. Secondly, after I do this, I'll be able to know that if the market drops, it reaches here, I will say it has reached a bullish order block on a daily time frame. It has even entered. But if it enters this yellow, I will see and I will know that it has reached a 4-hour time frame bullish order block. Now, after that, before this happens, we already have a proof that this one is the previous swing high, which became a demand here, or supply became a D or demand. Secondly, it is also where the market created this structure here on a 4-hour time frame, this structure there. So now, this is going to help you and I to determine what is going to happen in the future. From there, I will now go on a 1-hour time frame. 1-hour time frame is going to look something like this because it is a smaller time frame. So this here is now a 1-hour time frame. And this now is what a level of this bearish order block looks like, which we marked as a swing high. This one, we marked it as a swing low, where the market created a demand using the previous swing high there. And then the market bounced on it, it pushed. Though you can even tell this was just a fake breakout. The real direction was an upward. Whatever it is that these guys did below, it was just a fake breakout. And the reason why the market reached here, it is because I am also able to see this bullish order block at this level here. This candle, I'm going to mark it with yellow, and then also below this one. So the market came and bounced on a 1-hour time frame order block on these yellow lines. I'm going to mark it and say 1H BOB, 1-hour bullish order block, like that. And then I'll mark it like that. So here you can tell that the market here bounced, dropped all the way from up. It kept dropping. It kept dropping. When it reached a 1-hour bullish order block, the market formed a double bottom like this, and then you would have entered at the second leg. That is what the market does. The market will never change the direction minus creating a W, M, or head and shoulder, or even head and shoulder. So W, this was a W, the market pushed up. W's, you must always remember to enter at the second leg, not the first one. The second leg, you even put your stop loss down below. The market pushed. Also, the second leg was formed along on the bullish order block 1 hour inside. You should have taken this trade. You would have made some money. From there now, we are looking at where the market came. When you look at this level, you discover that the market is consolidating at a bearish order block 1 hour time frame. This one. This is what made the market to do what? To fail to break. But when you look what is happening, you discover that the market is forming something that looks like a W. And the market can push. Once the market breaks above this structure, we are going to consider this thing to be the break of this structure here.
Structure, the break of structure.
I'll even give it a yellow, this color, whitish. So once the market breaks above this, it is now finally, it will go. It will either come back to retest or it will just continue. And when it continues, it is going to aim to reach this level, where now they will now try to break above that level. Once they manage, then the market will continue to push up. Has it helped you with that explanation?
Very, very well. Okay, the question is this. On this, on the last one, can you see my mouse? No? Okay.
Yeah.
Can you see my mouse?
No, I cannot see it, but let me try to give you control.
No, I can't see your, what is it called? I can't see your chat again. I want to talk in your chat, but don't worry, I'm going to, what is it called? Explain myself.
Okay, you can try to move. Okay, you can move the mouse now.
Can you see my mouse now?
Try to move.
I'm moving, sir. I'm moving like that, sir.
Let me try to give you control.
Yeah, I'm able to see your screen again. Give me control.
I give you control of the mouse.
Okay. Is it working now?
Okay, you can try to move.
Click to start the mouse. Okay.
Okay. Yeah, I can see now you're moving.
Okay, thank you very much, sir. Yes, sir. Yeah, you explained something on this other block. This was called this bearish order block affected the yes, that is why it came down. Now it's forming a pattern like W. Are you with me, sir?
Yeah.
Okay, sir. Now, for me, now, I've not been in the market. I just came and analyzed this market. What should I wait for before I can enter this market? Before I can pick, maybe sell or buy? I said, what? Okay, assuming I just enter, I finished analyzing my market and I made the market like this. I'm just on the market now. And I want to enter this market now. I've seen it. Okay, I have to be patient for it to break out.
Yes,
and once it breaks out, is it advisable for me to pick the market or I wait for the retest?
Well, that depends. If you want, you can enter. That means if you enter there, you are going to be like you are going to be a breakout trader. So it's better you wait for it to retest, which rarely happens.
So okay, the retest rarely happens.
Yeah, sometimes the market can just continue pushing up.
Wow.
Yeah.
Wow.
So like as for me, I love entering at the second leg of candle, especially W or M.
Okay. Once you see the wick on this here, or how do you determine your entry? Is it when you see the wick on this leg here, when I'm putting my cursor? Is that where you enter, or how do you determine that, okay, it has formed the second leg, then you enter immediately? How do you enter?
Wait for it to drop down a bit again, because it will come back. If you look carefully, that pattern is specifically looking, is specifically beginning to make shape of of a W. All right. So always wait. If you can look at this chart here, let me show you. Okay. Let me try to do this. Can you try to, okay. When you look at this, you discover that this one, first leg,
yes, sir.
Second leg here. Have you seen this one, right?
Yes, sir.
So first leg, second leg here, the market went up. First leg, second leg, the market can come down, or the market can just reach here and then push up. That is the difference. So it is very, very much important that you understand whatever that is happening at that particular time. If you want, you can be a conservative trader. You wait for a break and then a retest, of which that retest can happen when the market reaches the bearish order block. It can be brought back by retest. Then you can have an opportunity to buy and go with the market. You get the point?
I get the point, sir. I get the point, sir.
Yeah. So it's very much important. That one is determined by you yourself, not me. If me, I am an aggressive enterer, I can enter right here, or when I see the market forming the second leg, I buy. All right.
Wow. Sorry, sir. So what is giving you confidence now is that you've analyzed the market, you know the direction of the market.
What gives me confidence? It's because I've spent about 9 years doing the same thing, seeing the same patterns, and knowing that these things works, this thing does not work. So it is all about you having confidence with what you're seeing, especially if you continue doing the same thing. You'll discover that you'll be confident enough when other people are undecided over what they have seen on the market. And when the market goes that direction, they would say, I saw this opportunity, but I was I tried to.
I was scared.
Yeah, I was scared.
Is it going to come back?
Yeah. So it's very, very much important that you get the point, and also how the whole thing works.
No, I got, because this afternoon, when this market was like making when it makes M here, it has formed one M here. It's like forming M.
Yes, sir.
From this top, it's forming M, not W this time. It hasn't formed the W. It has formed M already.
Yeah, and that's the confusion that's on the market.
Good. So when I saw it, yes, sir. Good.
When I saw it has formed an M, but at the same time, you are looking at the level of this bearish order block. And at the same time, we saw on a higher time frame that VIX 75 is in an uptrend.
Thank you very much. That is where I'm a little bit confused, because I did been when I saw it.
So what to give you confidence is understanding how the market has been doing in the past. You see and discover that the market has been breaking these structures. It broke this one here.
I understand. Well understood. I understand breaking of structure.
It break this one. It break this one.
Sir.
Now we are on this structure as well.
On this structure.
So
on this one.
If we go on a 24-hour time frame, which is daily, you will even see that the market is still showing some push-ups, momentum, not selling. So people here can sell, and that M is formed on a 1-hour time frame to confuse retail traders who only believe on how they can trade on how they can trade support and resistance. They lack this type of understanding. If you try to check very well, you will discover that the market has already done what? Where is my chart?
I think let's just come down, sir.
You discover that the market has already yes, the market has already done what? Retested that order block for the first time. Let's go.
Okay. I've seen the screen.
Yeah. It has already retested. It has already tested. Look at this. When just this retest alone here, tested, rejected, and then started pushing up, is a sign that the market is still in the buying power. If we go on a 4-hour time frame, you see that the market is going to show you something like this. So on a 4-hour time frame, you understand that the market again came to test this level of this structure, tested it there, and then pushed up, went back up again. So this one as well is showing you that the market is still showing some bullish momentum. And at the same time, on a 4-hour time frame, we can even see that the market can try to form an M. On a 4-hour time frame, it can try to push like this. By the time the market is reaching like this, it is a huge move. Then the market can drop. Okay? And at the same time, the market can do something like pa, and then go up. So there is that high probability that the market is still and must still go up. On a 1-hour time frame.
Okay, sorry, sir. Yeah, at this point.
Yeah.
Can you see my cursor? No.
Let me try to.
I want to show you something, sir.
Okay, you can now try to use.
Okay, sir. At this point, sir. At this point, where do you see the cursor, sir?
I know I'm waiting for it to begin moving. Okay, you can use now.
Okay, sir. At this point now, sir.
Yeah.
Yes, sir. Because there is a, I think there is a small structure here. Am I right?
Yes, sir.
Yeah. On this line.
Yes, sir. Yes, sir.
So yeah, it's structure there. Is it possible that the way we are looking at this market, is it possible because, you know, with these beginner trader like still managing, we might be thinking that, okay, so far, maybe it won't break here, then seeing M on H1, that, okay, it has made a small week here, is going to sell, but he's going to sell back. Did you get what I said, sir?
Yeah. I understand.
So
I understand. So the secret is you just to understand the flow of the market. And the flow of the market structure on a higher time frame, it is showing us that it is going up.
It's going up, sir.
Retail traders are thinking the market is going to drop. If we go on a 1-hour time frame, you even see many people might even be thinking that the market is. Come again?
I've seen a lot of people, they've sent signal that sell.
Yeah, imagine. But
they've sent signal. I was not looking at them. Look at these people.
Yeah. Imagine, but you and I, we are thinking that yes, the market must be a buy, not sell. So that is a problem that a lot of people have. So if we can take advantage of this type of movements and understand the flow of the market, it is going to give us more advantage. So the secret, another secret is, let's see how this is going to play out today. It can also give you confidence. Next time you'll be analyzing this type of the market, you will say, okay, I have seen this before.
Yes, sir. I'm only gaining the confidence. I know that yes, this market, like what we after analysis today, and that this market is still selling, it's still buying.
Yeah. So if
I know that the market is still buying, but what confused me now, I never knew that I should come to higher time frame. I was using 15 minutes. All my analysis, all my structures, I drew it on 15 minutes. So when you came to that, no, it's not done that way. If you want to draw your structure, then what is it called? Just go to higher time frame, draw the structure, then the bullish order block, the bearish order block, you draw it on higher time frame, then move back to lower time frame. Yes, it boosts my morale now. Yes, on 4-hour time frame. Now it has boosted my morale. Yes, sir. It has boosted my morale now that I know what to do. It's not that I will just draw structure on smaller time frame, then I'll be looking at market. It's not done that way.
Yes, sir. Yeah, exactly like that. Because with this, it is going to give you and boost you in the way that you see the market. So never just start analyzing or trading on a smaller time frame. Start on a higher time frame, and then from a higher time frame, you can now switch to 30-minute time frame, and you see how 30-minute time frame is going to look like. Because just starting on a smaller time frame, you will think, oh my God, the market is going to begin doing what? Selling. Because a lot of people will be like, oh, I'm seeing a W. I mean, an M, the market can drop. And other people, they will be like, oh, there is a resistance here. They will even put that something like this. But you and I, we have already discovered what the market is thinking about this movement. So this is on a 30-minute time frame. From a 30-minute time frame, we'll go on a 15-minute time frame. On a 15-minute time frame, we have something that looks like this. So in a 15-minute time frame, this is the chart. And for this chart, we have the market came to bounce on this bullish order block. We even give it white color, this bullish order block, this candle. That is where the market is coming from, and it is now trying to push. Okay, so we are trying to use
on 15-minute time frame.
Yes, sir.
Hello, sir. Yes, sir. I've seen where I've gotten it wrong now.
Yeah. There.
Can you? I'm very sorry, sir. Can you just? I want to show you something on the chart on my own analysis.
You can.
I want to click. Okay. I want to show you something on my screen. On my screen. I want to show you something, sir.
Okay. Okay, you can show me.
Can you see the screen now, sir?
Not yet.
Okay, come, sir.
Okay.
Yes, sir.
Yeah, I can see the screen now.
This is the question I want to ask you. This is on my 15-minute time frame.
Yeah.
This is the first structure I saw.
Yeah.
I drew it. When I saw this structure again, I drew it. But now, from what you showed me now, you showed me that all these one, they are structures, not this apart, this apart. That is what has been convincing me since morning. I do this one separately. I do this one separately.
Yeah. So that is it's an entire one structure, but within a big structure, there are also small structures inside it. That's the way it is.
I was on 30 minutes. I will have seen that, okay, this is a whole structure. Am I right?
Yeah.
Because the way you draw it now as a whole structure, it makes you understood that, okay, the market came here, from here, it retests this bullish order block, this red one, then it moves, it spikes up.
Yes, sir.
But on 15 minutes, I was still, the only thing I was just like, where is this bullish? Where is it? How can I spot order block again now? I'll spot the up one, I'll spot the down one. I'm confused.
Yes, sir. That's the way it is.
Did you get what I said now?
I get the point.
I said I do the first one here.
Yeah.
I do the second one. I was not looking the market because I'm already confused.
Yeah.
I don't know how to spot another order block. I did mean I'm be patient then, calm down, look at the market that, okay, this is a whole structure. It's coming back to the test here. I will have picked the market from here.
Yeah.
So at least that's another question. That okay, on higher time frame, I should wait patiently, like what I'm saying here, because this is a whole structure. This is a whole structure I'm seeing. A whole structure.
That's a whole structure, but within that structure,
it is the whole structure.
Yeah, exactly like that. That's a good one.
On each one, this is the whole structure. But on 15 minutes, I calm down, then I drew the whole structure like this.
Uh-huh.
Then these,
Yeah.
sorry, sir. Then is it advisable to put these lines and put in?
In fact, you should just be using small lines. Don't go overcloud. Tomorrow, when we do the finalize on how to use the strategy. Tomorrow
Okay,
on the
sir.
third day,
Because
you
I
see.
was, is it that it's from a certain, I was looking at the long line. I don't know. I was trying to look for the shorter lines, the one you are using. I didn't spot it on my system. I don't know. I cannot hide
No,
it.
they are found on TradingView, not on
Oh,
yeah. I
can't
use
see it on.
TradingView.
Okay, using TradingView.
Yes, sir.
Okay. But you can't enter market directly from what's it called? From TradingView.
I know.
You can't.
Yeah, unless you can do enter, unless if you open the brokers that these same guys advertise on their platform, TradingView platform. You can enter direct on TradingView.
Trade directly from TradingView.
Yeah, but you just need to create brokers account, like using Owanda. Yeah, so that's the way it is, but unless you use TradingView. But the TradingView implementation, the one that we use for binary, it has no I don't think you can enter.
Oh, I understand.